Rolling and action.
Hello everyone, thanks for having us today. We're Schulich investment management team. To start our presentation, I'm going to introduce the investment team firstly. So my name is May. In this team, my role is the head of institutional marketing, and these are my team members. John, who is the chief risk officer, Francois, who is the senior portfolio manager, Alan, who is our chief investment officer, and Paul, who is our head of performance analytics. So, and here is our today's agenda. We're going to talk about our investment philosophy, portfolio construction and trading, risk and return expectations, portfolio performance, and portfolio attribution. So now I'm going to pass to my team member Alan to talk about investment philosophy.
Okay, to start, I'm talking about our investment philosophy. Our firm has strong belief in momentum investing, and we use pairs trading extensively. In addition, we focus on growth stocks, and our portfolio is a concentrated portfolio because we are confident about our selection process. And why do we have a strong belief in momentum? Because Richard J. a famous investor, said, "One paradigm exception to is buy low and sell high. I believe far more money can be made by buying high and selling higher." And we believe in it is a pricey market, but still with room to grow. And we process by investing in stocks that show strong positive price changes and shorting stocks that show weak or falling price changes. And why do we believe in growth stocks rather than value stocks? Because in the history data, we found that growth stocks generated higher return in US market than value stocks. And how do we define the growth stock? We use measures such as high cash flow yield, earning growth, low payout ratio, and a high price book value ratio. And in summary, our portfolio philosophy is that a concentrated portfolio with risk control. We have a strong belief in momentum and growth. And to control the risk, we also do the minimal sector diversification. And now let me pass to my colleague Francois. He will talk about the investment process and portfolio construction.
This is our investment process. So as we see, our firm has a strong belief in momentum trading. So we long the stocks that show good performance and short the one that shows bad performance. We also firmly believe in pairs trading. So we go into and out of a trade as a pair. And this also adds an element of risk control to it, which we appreciate. And then finally, we diversify the portfolio by ensuring that no more than 20% is allocated to any sector, and that we equally weight the portfolios, spreading out our risk. So, in order to construct the portfolio, we first identify the factors. Second, we use quantitative and qualitative methods in order to select the stocks. And finally, we backtest the portfolio in order to develop the optimal allocation. So using the factors identified above, based on our philosophy, we're able to compute precise combined value and compare and rank stocks. We use Quantopian database in order to do this, and by inputting those measures we identified, Quantopian gives us a printout of the top 50 and the bottom 50 stocks that would actually fit our portfolio criteria. So we also use a volatility factor in Quantopian in order to rank the stocks based on volatility, in order to achieve our target risk of 8% for the portfolio. And also, we analyze the marginal contribution to risk of each stock in our portfolio using covariance analysis. So with trading, we developed a combination rank for all these factors. We use the quantitative methods to identify the top performers and the bottom performers. And finally, this led to our final portfolio, which included 50 long stocks and 37 short stocks initially at the beginning of the competition. So with trading, we developed a combination rank for all the factors screened. Our quantitative method identified the top 50 stocks and the bottom 50 stocks, which would be included in our portfolio. And this led to our initial portfolio having 50 long positions and 37 short positions that we believe fit all our criteria. Future adjustments to the portfolio were made because we needed to adapt to market changes. So we formulated new strategies and continued using peers trading with our execution strategy in order to ensure risk was controlled as much as possible. We needed to adapt to the market conditions, so we formulated new strategies, new ideas, and continued using peers trading to execute our trading strategy. Next, John is going to talk about the portfolio performance.
As we can see here is our portfolio performance chart. At the very beginning of our investment period, we didn't get a positive return at the very beginning, but we did a strategy enhancement in January, and we have a positive return after the enhancement. The short-term momentum is one of our primary investment strategy. The short-term momentum generates a beautiful return, as we can see from this chart. From the very beginning to the very end, short-term momentum is one of the primary performance generator. And another performance generator is growth, mentioned as probability. We can say from the beginning there are some volatile, but at the very end, but overall performance is a positive. The overall the portfolio have an overall standard deviation around 7.02%. We, as mentioned, by portfolio risk 7.2, and the largest risk contributor is win result, which has 12.56% active risk, and it has around 6% weighting in our portfolio. Even though this 12% on the reporting date, they have 12% standard deviation, but we have already rebalanced it, and we make the standard deviation below 10% for any single stocks. Okay, next. This is sector allocation by dollars. We have around 20% allocation in service, and based on our investment philosophy, we won't allow any section have more than 20% weighting. And here is our top 5 weighting. As we can see, Lululemon have 6.26% weighting of our overall portfolio. Besides momentum, we also did valuation for Lululemon, and we strongly believe Lululemon has a greater growth potential, and the target price is way higher than the current price. And as a pair to Lululemon, we short Under Armour, because Under Armour close some store in Canada as opposite way to Lululemon. That's why we short it. Next. Francois will talk about performance attribution.
So finally, we're just going to finish off with the attribution of performance to our portfolio. As we can see, by sticking to our style, we definitely generated positive returns from the momentum strategy as well as the growth strategy. However, we do believe that there's a bit of an issue with the model used to generate this graph, because our stock-specific factors generated negative 1.68% returns, and we believe that would turn in the immediate future. And based on the factors that we identified, based on our philosophy and our strategies, we can see here that these are our top 10 assets. And as we mentioned before, our confidence in Lululemon, for example, was one that generated positive returns and outperformed the rest of the portfolio. Other stocks that also generated some positive returns were Boeing, and on the short side we had General Electric. These were based on our market outlook, our investment strategies, our factor selections, and we see that they paid off pretty well. While we have the top 10 stocks, we also have some bad performers in our portfolio, which we have rebalanced and gotten rid of. Some of these we expect to turn and we are still holding on to because we are confident again in our stock selection practices and process. We here at the Schulich Investment Management Team would like to thank you for this opportunity to present our portfolio process, philosophy, and ideas to you.